$32,229. That's where my total portfolio and my investments lie right now. It's not all of my assets, but it's more than I've shown you guys in the past. We've mostly focused on my Robinhood portfolio, and today I'm going to unveil it all to you. That's going to include my Robinhood portfolio. I'm going to quickly go over that. It's a little bit over $12,000 right now. We've seen a lot of capital appreciation since my last update video. It's going to go through Fidelity, which my main investment account has about $6,600 in it, and my Roth IRA, which has about $13,500 in it. Today we're going to get into all of that. We're going to see all of my positions and all of my returns. I'm going to totally uncloak all of my investments for you guys, and it all starts right now. Now, most of you guys probably know me from my Warren Buffett video, massively successful and by far the most popular video on my channel. I'm definitely going to do an income breakdown of that video because it's pretty insane compared to everything I've done on this channel. But we're also going to see some other content like my investments and my profits and kind of successes and losses. So stay tuned if you want to see some of that as well. And without further ado, my name is Chase. Welcome back to Intelligent Money Investing. Let's hop right into the Robinhood portfolio really quick. This right here is my Robinhood portfolio, and it is actually the first portfolio that I ever made, anything having to do with the stock market. I think I was a freshman in college, really wanting to get into finance, and I opened up a Robinhood account because it had no commission fees. I've since stopped adding to this portfolio, but still keep it around for kind of YouTube purposes. It's a lot better visually, I think, than Fidelity, but we still have some good screenshots on there. So we're going to go through all my positions here really quick. My last video goes more in depth into all of them, so if you want to do that, click on that $11,000 portfolio right on the channel page. But without further ado, we will hop right into this. So first position is DIA. I kind of just keep the major indexes up at the top here. DIA is Dow, S&P 500 is SPY, and the NASDAQ is QQQ. Three major indexes, and I also keep VOO here as well. I've kind of added to that because it has a lower expense ratio than SPY. Next position I do have here is SPHD. It's a high dividend, low volatility ETF. Not really something I love anymore, but it was a monthly dividend payer back when I first started investing in the stock market, so it was something I was interested in. About 23.75 shares, a lot of dividend reinvestment. I'll probably do a dividend reinvestment breakdown sometime in the future as well. Then we have VYM, another dividend ETF, DGRW, another monthly dividend payer. I have Amazon here just for a tracker. You'll see why just in a minute. I only have $1 there. I do have some shares of Apple. I've got 16 shares. It was initially pre-split, so I had 4 shares. I'm up quite a bit on this. One of the shares I got actually was from a Robinhood referral, so I actually have a cost basis of about $450 here, which is pretty good for a market value of about $2,000 now. So I'm very, very happy with that. It's probably my biggest winner in the Robinhood portfolio. And kind of going from there, they all get smaller and smaller in position size, so I'll go through them pretty quickly. Berkshire Hathaway, American Tower, Penn National Gaming is the company that bought Barstool. I'm up handsomely on that, and I also hold that in my Fidelity portfolio. AT&T, Microsoft, I'm up pretty well on. JP Morgan, AbbVie, which is an interesting one right now. If you guys pay attention to Berkshire Hathaway stock filings, they actually added this heavily into their portfolio. SUI is another REIT. PepsiCo, Realty Income, Starbucks, and then Rocket Loans, which is the Quicken Loans holding company. This is a pretty new addition. I'll talk a little bit more about that in the Fidelity portfolio. So this is what we've got so far, $12,000 in the Robinhood portfolio. Not bad, especially considering I haven't been adding to it much lately. Up 68% all time, which is about a few years. Kind of kept adding to it and stopped around here. So really this is a pretty accurate showing of how it kind of is built over time, but up about $5,000 in here, definitely something I'm happy with, and especially for it not being very risky investment. So I'll hop over to the Fidelity portfolio right now. So what we're going to do now is look at my Fidelity portfolio. And what we're going to do is look at my individual taxable account, then my Roth IRA. We're going to save that one for last since it's the biggest portfolio. And we're also going to look at the performance versus the market. There's some cool metrics on Fidelity that maybe you guys haven't seen before, so I'm going to walk you through all of that. But real quick, we're going to start with my individual account, and this is just a screenshot of the positions. Fidelity gives a little more information away, so I wanted to kind of be safe for my own financial aspects. So we're going to kind of just look at the positions here. What's going to stand out to you first on both portfolios is that I have fairly large cash positions in them. SPAXX is basically a money market default fund that your cash goes into and gets about like a 1% return. I think it's a little bit lower than that now. That's about $1,200 in this portfolio, which is fairly significant. It's probably about 20% of the portfolio. Then we have Amazon, which is about half of this portfolio and a huge amount of the returns. I bought into it a little bit after Berkshire Hathaway did, I believe. I think that was my thing that finally made me pull the trigger on such an expensive one share stock. And I'm up about 76% on Amazon, and that's pretty much most of my returns for this account. Then we have Berkshire Hathaway. You guys know I'm a big Warren Buffett fan and always want to be exposed to whatever they're doing. I have 6 shares of that in here, and I'm up about 9% on it. And then we have Realty Income. This one's been super hard hit by the pandemic. I think you noticed it in my other portfolio, and you're also going to see it in my Roth IRA for tax purposes. I'm down about 10.5% on this. I don't believe that includes my dividends, but I still think I'm down on this position overall. I was able to average down in my Roth IRA, so I have a little bit of a lower cost basis in there. Obviously here I'm a pretty high $70 a share cost basis, and that's a lot higher than it is right now. Then finally we have VOO. You're going to see that as a big position in the other one as well. VOO S&P 500 ETF. I believe it has the lowest expense ratio of any I've been able to find. So I'm up 19.5% on that. That's one I've been holding for a little while. And you'll see in these portfolios, these are ones I really averaged in when the market was down. That's really helped my returns out a lot. I kind of know that I'm able to kind of really know when to put my money in the market when the market's tanking. I'm able to kind of handle that pressure. I know it's not usually the most optimal strategy, but when I do have cash sitting on the sidelines, as I do have a ton right now, I'm really not afraid to hammer it in when it's kind of doomsday in the market like it was in March. So really, that's what I did to get some lower prices on my portfolio. Now we're going to look at my Roth IRA, which has a little bit more money, and it's going to be kind of continuing to build in the future as we get into the next tax year, and I can put $6,000 more in there. One thing I will say for you guys to do is definitely max out your Roth IRA every year if you have the opportunity to. I think we're all here trying to build wealth and get into high income brackets, so when we get to that retirement age, that money's taxed on the way in but not the way out. So if we're at a high income when we hit retirement age, we're going to be able to not pay taxes on that Roth IRA funds when we pull them out in the future. So that's just one thing to think about as you structure your portfolio. And now what you guys have been waiting for, the positions in my Roth IRA. Now honestly, I've been a little bit more aggressive in this portfolio because I know that it's going to be a portfolio that's not taxed on the way out. I've kind of wanted to see a lot of my dividends come in here and also a lot of my capital gains be seen in here. So I've been kind of making this a little bit more aggressive in a lot of individual stock picks alongside some big index positions. So I'm not really afraid to throw some money on more speculative stocks here, but still blue chip, speculative in a blue chip kind of way, if that makes sense. So another thing that's going to stand out to you here, about $3,000 still not invested. I'm looking for positions to get in there. I know you guys are probably going to be killing me in the comments for all the cash, and trust me, if you guys saw my bank accounts, you know that I have way too much cash on the sidelines that I'm trying to get deployed. So that's our first position there. Then we have American Tower. I really like American Tower as a REIT. It's a heavy dividend growth stock. They've increased their dividend insanely over the last decade. So definitely want to look into you if you're a REIT fan, and especially if you're a dividend fan. Once again, Berkshire Hathaway, we've got 3 shares in here. And we have more Realty Income as well. Realty Income, really known as a monthly dividend payer, and that's one of the reasons why I really enjoy it. Really, with the dividend reinvestment, we've seen the kind of shares be able to grow. We're up to about 12.4 shares, and that'll continue to go into the future. Penn National Gaming, the Barstool stock, and it's really a big online gambling play. I bought in when everything was crashing in March, and I think I had about a $22 per average share price here, and I'm up about 190% on that. It's really been a big rebound stock. There's some people even got into this company around $3, which would just be an insane return right now. It's sitting at about $65. I'm pretty optimistic on that one, but the price is a little bit high for me to jump in anymore right now. I also bought in some Rocket. This was I think this is my most recent purchase. I think I did this last week. I have about 7.5% on that right now. Only put in about $400 into that one. Then we have VIG, which is a dividend growth ETF as well. You guys are seeing, I've kind of am messing around with a lot of those, seeing which ones I like best for just dividend reinvestment ones. And I have a big position in VOO here. about $6,600 in VOO, up about 15%. And that's really been my core position, my main go-to in all of my portfolios, as you guys have seen so far in this video. It's really one where I want to keep coming back to whenever the market's down. I'm hitting VOO. I'm trying to hit VOO on a pretty regular basis if we're up or down, but especially when we're down, I'm trying to hammer that VOO position. It's about 50% of my Roth IRA. Now let's look at how these returns have kind of compared to the market. Well, these Fidelity accounts are fairly new, so you'll kind of see 1 month, 3 month, year to date, and 1 year values rather than the 3 or 5 year, 10 years. So small sample size, but so far I'm really happy with how these are performing. My 1 year for my individual stock portfolio is at 22.18%. My year to date is about 19%, and that's just crushing the S&P 500 index for me. You can see year to date S&P is up about 2.77%. Nearly that's what I benchmark off of, and compared to my 19.57%. It's really kind of crushing the market. I'm really happy with how that's going. Same thing with the Roth IRA. Even with such a heavy cash position, this account really was started around April or March, February, so we don't really get to see the full year view of it, but up about 10% year to date, whereas the S&P 500 is up about 2.77%. And with such a heavy cash position, still to be able to beat the market, I'm really excited about that. Obviously small sample size, so don't buy too much into this, but I'm not going to be a hedge fund manager tomorrow, obviously, but I'm happy managing my own finances like that. It's going to be a lot more valuable to see this information 3 years, 5 years, 10 years down the line, though. So I think that's an exciting view to kind of see those metrics in. And really, if you guys have any comments on my portfolio, I'm totally open to any criticism or suggestions you guys might have. We definitely probably won't have the same views on how our portfolios should align, but I'm always in for debate in the comments down below. And really, if you enjoyed this video, please drop a like, subscribe if you're new, and I'll see you guys in the next one. Thanks so much.